The ECB has just cut interest rate. This has huge ramifications for the crypto market. In this video, I'm going to break down exactly what has just happened. This is breaking news. ECB cuts interest rates for the first time in 5 years. I'm going to explain why this is huge for Bitcoin. We've got Bitcoin knocking on the door of 71,000. Can we start our journey? Are we just starting on this bull market? Loads to get into in what could be a pivotal turning point for markets. Let me explain. So as you know, crypto risk on assets tend to do really well when there is excess money in the market. You need excess money in the market. Now, when do you get excess money in the market? You get it when the economy is struggling, whether it's the pandemic, whether it's during war efforts, whether it's during a financial crisis like 2008, 2009. What happens? Central bankers get together and they print money. Why? Because they don't want to be unelected, right? They don't want to lose the elections. They need to keep their political party in check, and they're going to do so by printing money and stimulating the economy. Think of the money printer going around printing all this money into the economy. But then you hit a problem. That problem is inflation. And this is a problem we've been battling for a very long time, post the pandemic printing. And this is why we've had the steepest rate hike climbs we have seen in a generation, right? It's been tough. You got high interest rates, mortgages are high, car payments are high. Nobody's got a spare buck to put into crypto, relatively. And so now we hit a turning point. And the ECB have taken their first step to cutting interest rates. They've cut from 4% down to 3.75. Take a look at this. Based on updated assessment of the inflation outlook, the dynamics of underlying inflation, and the strength of monetary policy transmission, it is now appropriate to moderate the degree of monetary policy restriction after 9 months of holding rates steady. Very interesting. And is this a shift now where other central banks like the Fed will follow suit? Remember, if I show you this chart here on Bitcoin, what you're looking at here is a weekly chart, and you're looking at the correlation between Bitcoin and this green line, which is global liquidity. Okay, now if you follow this liquidity here, what you will see is as this liquidity increases, Bitcoin ran up to 64,000. As it continued to uptrend, Bitcoin ran up to 69,000 in 2021. Throughout the bear market, it was decreasing, right? Liquidity was decreasing. But look at this. Even in this short term here where Bitcoin's risen up with the spot ETF, with the anticipation of the Bitcoin halving, with all the things that are going on, it's done so despite liquidity coming to the downside. And so the question is, can you imagine what happens when this liquidity index starts ticking back to the upside and goes on another upwards trend? Can you imagine what happens when this inflects upwards here in this direction? That's where you expect Bitcoin to start tearing faces, and that's what I'm looking forward to in terms of this next bull market. Hold up, do you want to learn how to trade? Then you need to jump into our Telegram community. Link is in the description. In our Telegram community, I share my altcoins. I share how I do my trade setups, how I do my stop losses and take profit, so you could learn to become a profitable trader. Check it out. Link is in the description. If you're following me on Twitter, you know I would have shared this earlier on. We are just 3% into the halving process. And if you've looked at every previous cycle, at this point, the excitement hasn't happened. I mean, already here on Bitcoin, we were at 15,500 months ago, and now we're at 71,000. But if you've missed that, it's still super early. I mean, if you look at the charts, it's later on in the halving process you get your moves, right? Later on in the halving process, you get your peaks. Later on, and again, at some point later on, we're expecting a peak here. Look, we can't predict these things perfectly, but what I can do is say, oh, look, previous halving, 3%, wait a while, all-time high. Previous halving, 3%, need some more time, all-time high. Need some more time, all-time high. Maybe we just need a bit of more time. And now when you tie that in with central bankers starting to cut rates, this is what I've been saying for a while. The worst was behind us a while ago. You could see that. It's obvious. You can even see here with the Fed rates. Yes, we've not priced in a rate cut, right? Markets don't expect a rate cut in June, nor do they even expect it in July. But you can look ahead and say that by September, markets expect one rate cut, which is fantastic. So if we know that, why are we not bullish now? Remember, your job as an investor is to preempt these excitements when you can see the fear is starting to, diminish, when the worries ahead of us are far less. That is when you ultimately want to rotate risk on. And that's what we're now starting to see. If we jump onto the dollar index as well, let's take a look here at the dollar index. you can see how that is now starting to stall. This is a weekly chart you're looking at. It created a peak here in September of 2022. It tried to run up towards the end of 2023, and it tried to run up now, and it's getting rejected. It's creating lower highs. This is a downward trend, and this is really good. We need to keep this, creating this double top pattern to send it into this direction. If we can send the dollar index in this direction, remember, Bitcoin and crypto is inversely correlated. They can see pumps, and this is going to happen if inflation starts to weaken, if job figures like the ADP jobs report we got yesterday start to soften as well. And that brings me on to the next topic, which is we get our non-farm payrolls on Friday. Okay, that's tomorrow at lunchtime. We will get a reading of the latest jobs figure for the US market. This is the number that the Fed use. Earlier in the week yesterday, we got the ADP, which is the private jobs figure. That came in really soft. It showed that there was less jobs created than were expected by the market. Can that be backed up by the non-farm payrolls? If we get the same picture painting tomorrow, that is a good sign for us getting a rate cut sooner rather than later. That will create more of a movement here in the dollar index going to the downside, which is exactly what we want to see. And so when we then jump back into Bitcoin and we take a look at what's going on here, you're going to have to excuse all these lines, but we're in a very important pattern, right? We're running up to this 71.7K line, and we've got to break this resistance. Let me show it to you on the JD chart. It's a little bit cleaner. Look at this. We're in this downward trend slightly, just consolidating. We bounce. Now we're coming to this level. We test it once, twice, thrice, 4 times, and now at the 5th time, can we break it? Look, if we can't break it, maybe we need to come back down. Maybe we just need to come consolidate again, and then boom, off we go. It may need a little bit more time, right? Maybe it wants to come back down, even down to 68, maybe for a bounce. Maybe even it wants to come down to 64. It doesn't matter. It's looking strong, and soon, once we break through this, things are going to look really, really impressive. Again, you've got your EMA ribbon around the 68,000 level as well. Does it want to come down, collect some support from EMA ribbon, and go mount another attack? Once we clear 71,000, that is when things start to get exciting, right? You guys know I shared the price target of the breakdown of this falling wedge pattern. This price target, let's do it live here. You can take it from at least this move if you're being conservative, apply it to that point there, and then what you do is you put it at the point of breakup. And when you put that there, you see that this move has the potential to take us up to 90,000, 100,000 and beyond. This is a powerful, powerful pattern and a bullish setup indeed. But of course, we have to clear that resistance at 71. If not, I'm expecting a little pullback, a little bit of a cooling off, let the RSI reset before we can go again. Either way, I think it's a matter of time before that 71,000 and the previous all-time high gets cleared and we head back into price discovery on Bitcoin. This market is too bullish. When money's being printed again, when monetary policy is being loosened, I cannot express how important that is for crypto. Crypto is a function of money flowing into the system. If people are flowing their money into USDT, if they're flowing into Bitcoin, if they're flowing into altcoins, that's when the market does well. And if I jump back in here into total market cap, this is the total market cap of crypto. Let me show it to you on the weekly chart, right? You can see that at the peaks, it hit 3 trillion. And now already, despite interest rates, not being cut yet in the US and just starting being cut in the Europe, this is still close, right? It's at 2.57 trillion, 2.6 trillion, call it, despite where we're at. Imagine when monetary policy is loose. Imagine when their, interest rates are like 0 or 1, or even when they're printing money. We expect this to start working towards 5 trillion, 6 trillion. And that's where the market's going to grow. The market is not going to grow from the same money where traders are just moving it around, just buy, sell, buy, sell, buy, sell. That's not how the market's going to grow. It's going to grow through adoption. More money coming into the system, more money, whether it's being printed, whether it's being handed out by governments, monetary policy loosening. And so when people are paying less interest on their mortgage payments, when people are paying less interest on their car payments, and all that filters through companies and the rest of it, that is where you start to see more net money flowing into risk on assets. Not just crypto, stocks, real estate, all this kind of stuff, watches, luxury goods like cars. You'll see that bull market return, and that's where the excitement is going to be. And that's what I want to be locked and loaded in. All these bear market purchases are going to look like amazing purchases when we're sitting in that bull run, looking back at when we were buying Bitcoin at 15,000, 20,000, 30,000, 40,000, all the altcoins we were buying throughout the depths of that bear market. But even now, like I've illustrated, it's still early. As long as you're smart, you're buying on pullbacks, you're not chasing green candles, you're in a good position. You just got to make sure you don't FOMO. So, big day, EC ECB making their first rate cut of what could be a couple this year. Markets when you're pricing in 2, maybe they'll do 3 or even 4 this year, right? Well, at least 3. That's something we'll need to watch out for. Will the Fed follow suit at some point? I'm not expecting it in June, but maybe a cheeky one in July could come on the cards if figures start to cool off a little bit and we see inflation trend to the downside along with those jobs figures. If you appreciate these updates, if you want to see how I'm trading, ijazcrypto.com/TG is where you can actively trade with me and our members. Make sure you jump into there. Look forward to trading with you. Thanks for watching, and I'll see you in the next one.